Maverick Traders. This is Robb Reinhold, and we are in the final week of 2023. After this week, we will be putting a bow on 2023 and putting it to rest because it's 2024. And that's the thing I love about trading. The market does not care if you did well or poorly last year. It doesn't care. Next year, you've got to perform. You've still got to step up, analyze everything. And so for those of you that had a great 2023, we're so happy for you. But guess what? You can't rest on that success. The market doesn't care. And for those of you that struggled in 2023, guess what? The market doesn't hold that against you. You just got to do better. So let's jump into it. In this session, we're going to talk about what happened this week. We're going to look at the broad markets. Then we're going to dive down into the sectors. And really, we're going to score all the sectors from +3 to -3. And then we're going to take some of the best trades in some of those sectors and take a look at them.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's get ready for the week.
We have been talking about the Trading Collective for the last couple weeks, and this is the last week we will be talking about it because next week is when it officially starts. What the Trading Collective is we are going to be meeting with a select group of traders, and we are going to be doing live trading. So on January 2nd, I'm going to be outlining all of our entry rules, exactly how we're going to enter trades, exactly how we're going to do it. And then on Thursday night, January 4th, I'm going to go through our exit rules, every single exit rule we are going to be following. So come join us on Tuesday and Thursday night. If you can't join us live, you can always watch a recording. But remember, you must opt into the Trading Collective. So later in this next week, we'll be sending out the formal invitations to our Maverick traders to sign up for this. You're going to have that first month for free to really see if this is something you think is going to be valuable for your trading. So in January, Tuesday and Thursday, again, we're going to go through entry rules and exit rules. And then we're going to start our trading experiment over the weekend. And on Monday morning, when the bell opens, we are going to be meeting live and we're going to be entering the trades we talked about over the weekend. And then on Friday, we're going to talk about, does anything need to be adjusted? Does anything need to be exited? And we're going to just keep doing this every single week and showing how compounding interest and trading options in a basket can work in a real-time portfolio. As I said, you must opt in. We'll be sending out the email this week. All you need to do is opt in. Then you're going to be part of it. You'll get all the emails, you'll get all the correspondence, and you'll be able to attend all of the sessions. If you have any questions, send us an email. You guys all have our email addresses. Send one of us an email, and we will get you more answers. We are very excited for our Trading Collective coming up in 2024. All right, let's jump into what happened last week. The markets were bullish. Now, I've been very, very clear over the last 4, 5, 6 weeks that this market is very highly likely to melt up into the end of the year. And that's exactly what has happened. And I've been telling you that I have some traders that are fighting this. And I've told them, look, just fight it in January. Right now, everything's against you. All the seasonality patterns, everything is against you. Don't try to fight this market. Just jump into the stream, go with the longs, and then January, sure, it might be a whole other ball game. That's exactly what we've seen. And here we are moving into the last week of the year. Why would it be any different in this last week? We had some really good inflation news, and let's go ahead and just jump into that right now. We had this on Friday. We had the core PCE price index. Now, this is the Fed's favorite indicator for inflation, and you can see it was even lower than expected, 0.1% month over month. So that is sub 2% inflation. This is exactly what the Fed wanted to see, and now we're starting to hear really active talk of the Fed cutting rates, maybe even in the summer. So we have this great news. Again, we've already had really good news on inflation, but this one was just really good news on inflation. Meanwhile, take a look at some of the other reports we got. Existing home sales, were much higher than expected. Consumer confidence, much higher than expected. Durable goods orders, much, much better than expected. Pretty much everything this week was a very, very good report. The one you could point out said wasn't as good was Philly Fed. Okay, but with all that we're getting out in the market and in the economy, this is Goldilocks. Goldilocks where it's not too hot, it's not too cold, it's just right. This is another reason why we think these markets are likely to stay bullish. Let's check in on some of the trades we talked about last week. Now, I didn't share many with you. I only shared 3, and that's because I didn't really want to encourage anybody to do a lot of active trading in these last 2 weeks of the year. The first one was American Tower, and it was a nice little bull pullback where you can see we've had a little pullback from this last high at about 219. We pulled back, we held there, and you can see we're now on our way back up. Yes, there is going to be some resistance in this 218, 219 area. We hit it on Friday, but this trade has all the way till January monthly options expiration. It's a 210, 220. So you can see this trade is already nicely profitable here and has some more time to go. We think this one looks really good here to the upside. Next up, we had a bullish trade on CRISPR Therapeutics. Now, as you can see here, we talked about how volatile this was. We talked about the scaling. We said, look, this thing has basically doubled in the last couple weeks. You really need to be cautious with these. Now, the only way I trade super volatile stocks with options is with verticals. So we had a 60-70 vertical spread, and you can see that this stock had a good day on Tuesday, had a terrible day on Wednesday, and then had a bounce back on Friday. For the week, the stock went up 2.5%. So again, it is on its way up, but this trade has more time to go. We just need it to get up to 70, and we've got a max gain. To me, this one, it's not really definitive. This wasn't a great price action we had off of a nice bottom here. So for me, this one is 50-50. We'll see if this one works or not, but it's not great price action at the moment. And then last, we had a sideways play on NVIDIA. Now, I talked about how we've already had a really big run in all the large cap stocks, and everything's had a good run. And my premise was that we're going to start broadening out the rally. And actually 2 weeks ago, I said that the S&P and the Qs probably have a little, maybe a couple more percent left to go, but that the Russell 2000 small cap stocks have really lagged behind, and they have a lot of catch up. And I think since then, they've gone up about 8% on the Russell. So my premise on this trade was that stocks like NVIDIA, Meta, Microsoft, they have already had their big surge, and they're probably done for the year. So we talked about having a sideways trade at 500. We had a 485, 500, 515 butterfly. Now, I took some profits when it got to 500. And by the end of the week, I actually closed the remainder of my trade for break even. So overall, this was a small gain. And again, that's all this trade was, is a small gain. But I think you can play this same play this week. I think the large cap tech stocks that have had a 200, 300, 400% run for the year, I don't think they break out and run to new highs this year. They definitely don't sell off. So I think there's some really good sideways plays for this week in those kind of trades. Let's jump in and take a look at the market and see, did we get any sort of scoring change whatsoever? We take a look at the Dow was only up 0.25%, S&P up 0.75%, Qs up 1.5%, and here we are, look at the Russell. The Russell up 2.25%. What we're starting to see here is we're starting to see this rally broaden out, which means all the things that have not been the best performers, they're starting to get money because all this money is coming into the market. And they're looking at the things like NVIDIA and Meta, say, oh, they're already up 300% for the year. Where can I put some money that is a more reasonable place? So we're starting to see some of the underperforming sectors, the underperforming market, start to broaden out. Let's talk about oil. Oil has been a really big move to the downside, and it's really helped out the outlook for economic growth. I think we're probably bottomed out on oil. We saw the turn in the energy sector as well We are no longer a negative in the energy sector. It's moved up to a zero. This is one of those places where as more money comes into this market and it doesn't want to chase the 300% gainers, it's going to go find some of these other areas to invest in. We had a huge surge in basic materials this week, and gold was part of that. And I think gold likely heads higher as well. Let's take a look at the charts, because that's in the end, that's all we care about. Here is the S&P. So we had a base, a breakout, a base, and boy, you can see this is a messy week this week. But take a look at it. Monday up, Tuesday up, Wednesday was a nasty day. Wednesday, the market was holding up nicely, about up 0.3%, and then in the second half of the day, it just fell apart. It absolutely fell apart and closed on its low, and it was a really nasty day. But take a look at the next 2 days. We gapped up. People came in and bought Thursday, and then we gapped up and basically had a doji on Friday. Don't be surprised if other moves like this happen in the next week or two, where you do have these one-day freakouts. I think if you do see a one-day freakout, I think you want to be a buyer on those days. Again, the market just looks almost bulletproof here through the end of the year. Here are the Qs, same thing. We're just high basing here, but drifting a little bit higher in this base. These are my favorite kind of bases that just slope higher. They're so strong, they just can't even pull back before they move higher. I want to challenge you here. Is there anything in these charts that will tell you that the last week of the year is going to be a bad week? There's nothing. If anything, there's a chance that we get that melt up where more money's coming into the market than's coming out, and it just is going to find places to go by the end of the year. And let's take a look at the bonds, because for anyone who is still bearish, this is the story here. The bond market has gone from 5% down to 3.9, and take a look at this week. No bounce whatsoever. Actually, a low base with a bearish tilt to it. So for me, the bond market is saying yields are likely going even lower than 3.9%. That is so incredibly bullish for the stock market. So here we are, the last week of the year. There's no reason at all to think that the market's going to go down substantially this week. The markets are closed on Monday, so we're really talking about Tuesday through Friday of next week. We are moving into the period called the Santa Claus Rally. The Santa Claus Rally is the last 4 days of the year and the first 3 days of the next year. So here we are, we're really talking about this week and then pretty much next week. Let's go to the stock Almanac and get the numbers. This 7-day period of time is positive 67% of the time, and the average gain is 1.3%. In 2000, the gain was about 5.5%. 2021, it was about 3.5%. It's just a very, very bullish time of the year. There's lots of new money coming into the market at the first of the year. There's rebalancing happening at the first of the year. There's a lot of good things happening. If you want to be my perma-bear here, if you want to say, Rob, this is crazy, it's gone up too much, I said to just wait till January. Now, I'm not talking about January 2nd. I'm talking about maybe middle of January, because all of the trends are saying that we're likely to get a strong first part of January as well. So I don't think you want to be a bear here yet. I think you want to just go along with the trend. It's been a very easy trade for anyone who's just gone along with the trend. It's been really the easiest trading December since 2016 when Trump won, and you knew that no one was going to sell in 2016 because they knew taxes were going down in 2017. That December was up 10%. I think this one has been almost as easy as that one. On the calendar this week, you can see it's a holiday week, so there's really not much. This week is typically a pretty mellow week. It is lower volume. It is a little bit lower volatility, but the Almanac says it's typically an up week. There's no reason at all to think that this week is not going to be an up week. It could turn out to not be an up week. We could easily have a down week. We could maybe even go down 1 or 2%. But when you're looking at statistical probabilities, this week is a pretty easy call this week of where you should be. Now look, it goes up 67% of the time, which means that 33% of the time it doesn't. This might be a year where it doesn't. but the statistics say you want to keep being bullish for this week and into next week. So let's take a look at the sectors and let's see if we had any movement this week.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
The best performing sector for the week was the communication services sector. Communication services up 4%. And then take a look at materials and energy. Also had nice weeks. Utilities was the lone negative one, but you could see that pretty much everything else is in this, pretty much market perform bit. Healthcare did a little bit better than average, but pretty much you can see most sectors pretty much just did what the market did. Let's go in to every single sector and score it from -3 to +3. Utilities backed off. Utilities were at a +2 last week, and you can see they backed off pretty large, and we are now down below that 20-day moving average. We now have this 20-day moving average flattening out. Back here, it was clearly bullish. Back here was clearly bullish. Now you can see we're not clearly bullish anymore. So we are downgrading utilities from a +2 to a 0. Last week, we were at a +2 on comm services here, and you can see that this week was a really nice week, and we've now bumped that up to a +3. So comm services gets an upgrade from +2 to +3. Real estate was a +3, and you can see we didn't go up this week, but look at that. A really nice sideways week off of a big, massive rally. After a big rally like this, when you don't give much back, that is a very bullish sign. We're staying at a +3 on real estate. We are also at a +3 on healthcare. We are still at a +3 on healthcare. And frankly, look at the nice price action on this. We had a very nice pullback and a very nice bottom here, and we're now above this little bit of resistance. And I want you to take a look at this line that I just drew, because a lot of stocks are not above that yet. Healthcare is above that line. So again, just watch when we go through some of these other sectors to see how many are actually up above where they've been the high over the last 5 days. Into industrials, and this is just what I'm talking about. Industrials looks great. It's still a +3, but it's not above where it has been for the last 5 days. It looks great. This is a beautiful high base. There's no question this thing's going higher, but it's not the strongest one at the moment. And in fact, the healthcare sector looked a little bit stronger than this. We also have the financial sector. And take a look at this. It had a really nice base. Again, this just looks beautiful, but we're not above the resistance lines. It's at a +3. It stays at a +3. Still very bullish. Here we have consumer discretionary. Now, in this sector, we actually had a little bit of bad news on Friday. Nike came out with bad earnings, and Nike got hit about 10-12% on Friday. So the sector was down, but you can see it's still holding up near the highs, but it's not breaking out anywhere higher. We are at a +3, and we're just going to simply remain at a +3. Coming over here to tech. Tech has been a +3 for a very long time, and guess what? Nothing has changed. We're just basing. It's just a really, really nice base here as we're waiting to move higher. So tech remains one of the strongest sectors out there. Here we have basic materials. Now, basic materials closed a little bit stronger. We could point to this and say, hey, here's another sector that has actually broken out. The fact that it sunk back a little bit, I don't think we can say that the basic materials is the strongest sector. It's one of the stronger ones. But again, we did not break up above these highs. So it wasn't a -3. Nothing changes. A really nice high base here. basic materials likely to go higher. And then last, over here to energy. Energy, we were at a -1. And you can see we've crawled above that moving average. We haven't been able to punch out above it. So whenever we got something that's just pinned between moving averages, that gets a 0 from us. Now just think of where we've been on energy. We were at a -2. We went to a -1. We went to a 0. This is one of the sectors that is improving. It's getting better. It's getting stronger. As this market is broadening out, I actually do like the energy sector here for some mildly bullish plays. And I've got one for you here to take a look at as we look through trades. When we take a look at our sectors, this is where we were last week. So the upgrades this week, comm services goes to a +3, energy goes to a 0, and utilities drops down to the 0. As you can see, there's not a lot of differentiation between sectors. We've got a ton of sectors of +3. We got a +3 market. It's really hard at this point to say, okay, well, what is the strongest sector? Then we're going to have to take a look at, okay, which has been the strongest like over the past 5 days? And you know what? I don't think we need to get into this. The market is clearly bullish. Most sectors are clearly bullish. And we have utilities that's weakening, and we got energy that's strengthening. So let's take a look at some trades in some of the sectors that actually made some moves this week. The utility sector went from a +2 to a 0. So look, I'm not looking to get bearish, but I definitely want to try to capture something that is more neutral. Here is one of the hardest things when you deal with the utility sector. Once you sort out all of the stocks that don't have a lot of volume and are too low a price, you really are only left with about 20 stocks in the entire utility sector. And out of those 20 stocks, only about 3 or 4 of them have weekly options. The rest have monthly options. Now, I've been very clear. I'm very clear on where the market ends at the end of this week and at the first week of January. Here's the thing. I don't have any clarity or any gut feeling or any charting ability to really answer the question, where are stocks going to be in the middle or end of January? I literally don't know at this point. So the trades I'm going to make, I don't want to make a monthly options trade into January 19th, because I don't feel like I can see that far. So you'll see that the trades that I'm looking at are either this week or the first week of January. I really don't want to go past that until I get a little bit more data on where this market's going. So this is one of the stocks in the utility sector that has weekly options. And you can see that this stock is just in a really lazy low uptrend. We're having a bigger pullback, something like back here. We're just having a little bit bigger pullback than these little pullbacks we've had in here. So the big question is, okay, where is this thing likely to be? And I think we can really take a look at 68.73. Like, this is kind of the window of where I think this stock is likely to be by the end of this week or by the end of next week. So it's pretty clear here. The trade is 71 if I'm looking at this week. And if I'm looking out into January, if I do think that interest rates are headed a little bit lower, I think if you want to go out further in time, I think you go a little bit less bullish than what it is. So the trade I'm looking at is going to be the December 28th, 69, 71, 73, and that's going to put me right here. The midpoint of that is 71. I think that stock is likely to crawl up a little bit, bouncing off the 50-day moving average, but I don't really have any fear that it's going to break through 73 and keep going. So I think a little bit of a targeted butterfly is the play here on Southern Company. Comm services went from a +2 to a +3, so we have a strengthening in this sector. So I wanted to find something a little bit more bullish here, and I came across Roblox. Now, I don't have kids that are super young here. My kids are older, so I do understand Minecraft. And I understand that Roblox is simply Minecraft updated. At least that's what I'm told. But I do know that Minecraft was crack for children. My son played Minecraft up into his early 20s. Again, it was just that generation. That was the game here. Let's take a look at the chart here, because just a beautiful, beautiful high base. And then take a look at this candle. gap down, the buyers rushed in, and we closed at the high up above a level. Now, if I go back on this chart, and I'm going to throw up a longer dated chart here for you, you can see that we have some resistance up in the 47, 48 area. So we fully know that, okay, we could have some resistance up here, but this is such a beautiful chart breakout. The question is, how do you play a chart that has a really nice breakout short term, but when you take a look back, you see that there's some serious overhead resistance that it has to get to. This is where I break out my favorite trade, the diagonal call spread. So this is a trade I'm going to make. I'm going to go out to January 19th and do the 43 and sell this week's 47, right where the resistance is. So if this stock runs up and hits into resistance, this is a very profitable trade. This diagonal call spread the risk graph is going to look like this, where 47 is my upper strike. As you can see here, if it takes off and breaks out, I'm going to make some money. Yes, I left money on the table. The higher it goes, I don't get paid for it at all. But remember, this is just a 1 week trade. Here's the thing I love about this trade. At the end of this Friday, let's say it goes up to 47 and it hits resistance, but it's hanging out there. I can then come in and sell the January 5th 47 call, or maybe even the 48. And I can have another week to watch it. And let's say that I'm actually starting to get very positive that the market is likely to go even higher in January. I have this 43 call that I could just hold and be totally long on this if the market looks really strong. So hopefully you can see that this allows me to have 5 days and then look at it, and then another 5 days and then look at it again. And if at any time I don't like it, I'll just dump it. This is the right way to go into this uncertain late January period. With every week, you get to reevaluate the trade, reevaluate the markets, and say, hey, I don't want it. You could just do a straight diagonal, 45, 48, give yourself 2 weeks. That's a pretty clean way to play it as well. Then the last trade I want to go into is in the energy sector. I don't want to have a ton of trades out there. Again, I'm very confident in the next week or two. I just don't have the confidence. So I don't want to put myself out there because I want to keep my capital safe. And then in the first part of January, when I get more clarity, then I can deploy it in a much better way. I feel like right now, I don't have clarity 3, 4, 5 weeks out. So I'm just going to not make trades into that period of time, and then I can adjust much easier. I do like the energy sector is strengthening a little bit, but you can't get all that bullish. Now, this is a stock that only has monthly options. This is Enbridge, ENB. So I think you are going to have to just do a mildly bullish play. And again, it's the 35, 37.50. The stock right now is at 36. So this is going to cost you about $1.20, which means you're going to have about $1.30 in a payoff. If this thing rolls up to 37.50 by the end of January, by the third Friday of January, this is going to be a very nice max gain trade. I'm looking at the energy sector. I'm looking at, okay, if the energy sector keeps improving, this stock should move up above 37.50 by the third Friday of January. If energy rolls back over, then yeah, this is going to be a loser. But this is where I want to start putting money. If I'm looking to put money into January, I want to look at the stuff that hasn't done quite as well, because we will talk about the January effect, where the underperforming sectors tend to do better than the outperforming ones in January. We'll be talking about that more next week, and I'll give you all the reasons why, and I'll give you the data behind it. If there's any trades you want to share, please jump on the Maverick Trading website, log in, go to the members area, jump into our forum. We love to see traders sharing trades there. Let's go ahead and wrap this up. This is just flat out bullish. I've said that for the last 3 weeks. If you're fighting this, I don't know what you're looking at in a chart. I don't understand how you can be short heavily in this market. I just literally don't get it. This has been one of the easier periods of trading that I've seen in my career. I think we have 2 weeks left. After that, I'm not looking to be a hero. I'm looking to really pull back and say, hey, let's approach this with caution. But I feel like there's a really nice window here. And I've been saying this for the last couple of weeks. There's a really nice window here to make some good bullish trades and make some easy money in this market. I think that's coming to an end, but I think we got 2 more weeks left. Just wanted to give one more plug for the Trading Collective. We'll be sending out invitations to all the Maverick traders this week. You need to opt in. Once you opt in, there will be more choices available to you inside of the Maverick Trading members area, and you'll be able to navigate there and click on all the videos and watch some stuff. I want to end this trading room and just tell all of our traders thank you for a great 2023. Merry Christmas, happy holidays, whatever it is you celebrate. We hope it's a good one. And have a great time and just relax, enjoy family, enjoy your time off. Look, take the whole week off. We don't care. Next year, we'll worry about that next year. But just again, enjoy yourself this holiday period. Goodbye, everybody.